question is, what is private mortgage insurance and can I avoid it? Private mortgage insurance, PMI, as it is called, protects the lender if you stop paying them. PMI does not protect you, the borrower. PMI is typically required when you pay less than 20% of the purchase price using a conventional mortgage loan. If you stop paying your mortgage, PMI protects the lender and you could still lose your home through the foreclosure process. Lenders may offer conventional loans with smaller down payments. However, you will typically pay a higher interest rate for those loans. So how do you avoid paying PMI? Paying 20% down removes the PMI requirement for a conventional loan. If you are unable to pay a 20% down payment, you might consider other loan types like an FHA loan. You may also try piggyback mortgages as another way to avoid paying PMI. These second mortgages, or as they are called, junior loans, along with cash, help borrowers meet the 20% down payment requirement to remove PMI. However, remain mindful these second mortgages come with higher interest rates. So, how are loans structured? One example is the 80-10-10 mortgage loan. In this scenario, 80% of the contract price is secured with the mortgage loan. 10% of the contract price is secured with a second mortgage. 10% of the contract price is secured with cash. 80, 10, 10, or 100% of the mortgage. Know your original property value. Original value meaning the contract price or appraisal value if you have refinanced. With a principal balance of 80% mortgage of the original value allows PMI cancellation. Contact your servicer in writing to request removing PMI. Your servicer is required to cancel PMI provided you meet certain requirements. Your payments must be current. You have a good payment history. You do not have a second mortgage or a junior lien. You can provide evidence of the property value. With a principal balance of 78% mortgage of the original value, PMI cancellation is allowed. Your payments must be current. PMI will not be canceled until your payments are current. With a principal balance of 50% of the original full term of your loan, your servicer must terminate PMI. Borrowers meeting this guideline are those possibly with balloon payments or interest-only payments. Mortgage insurance premiums, or MIP, for FHA or Department of Veteran Affairs can be canceled, although they have different requirements than PMI or conventional loans. Contact your loan servicer for specific guidelines to cancel PMI.